Morning, guys. It is 11:30, November 30th on a Wednesday. The monthly candle closes today. We're going to get a brand new monthly VWAP, a brand new monthly open. Keep that in mind. This is still my game plan. I've opened up some BTC spots here past couple of weeks. Majority of my bids are in the yellow box, which is between $10,000 and $13,000. The 200 MA on the 2-week, right? 200 MA on the 2-week, which is red, is sitting exactly on 13,685. I personally think that if we do go down there, it's going to be pretty reactive. Blind long for me. Well, and let me tell you this, guys. I know a lot of people were asking me what happens if we go down to like 8K or 9K. We're going to get a reaction regardless, right? So when we get a reaction, if I see that the indicators or the oscillators are extremely bearish and I would do it over-unders, I'm going to probably exit. Because you're not going to get a bull market starting from down here, right? It's going to be reactive to the top, retest, and come back and either make a higher low or make a lower low. So what do I mean by that? Well, it's a very simple concept, right? If you end up coming down here and go all the way down to like, say, $10,000 or $11,000, which was the breakdown right here, somewhere around this area. When you come back down here, right, you're going to get a reaction to the top side. You're going to go retest this. When you retest this, if you have bearish indications across the whole map, then you know that for a fact that the likelihood of it making a higher low will be slim. Chances are you're going to make a lower low. At that point, you have to exit. If you look at the monthly candle on a higher time frame, you know for a fact that 13,000 will be reactive. Worst case scenario from a wick perspective, 10,875 should be reactive. So you know that the safe zone for you is in this box. So regardless of what happens afterwards, hold on. Make this green. Regardless of what happens after, make this blue. Regardless of what happens afterwards, your red box is a buy zone. Reaction to exit at the blue zone, right? Worst case scenario. And then from there, you either make a higher low or you make a lower low. And there is a probability that we go down to like $6,000, $7,000, even $4,000 if there's some kind of like, economical global recession or something really bad takes place. This whole SBF shit was catastrophic. And I'm still surprised that we're holding so well after so many freaking people lost money and companies went belly, they've just, bellied up and stuff like that. So, keep in mind, anything is possible. If you look at the weekly time frame, there is a level that I really do not like. I'll show you right now. 5 day was it? Yeah, 5 days, sorry. This level over here, in my opinion, needs to get taken right here. This wick, this needs to get taken. And we haven't done it yet. I know we're close, but we haven't done it yet. And to me, that doesn't mean that we're not going to do it just because we stopped over here. This level over here needs to be taken, man. I don't know how we're going to do it, but it needs to be taken. So even if we do happen to go up a little bit, retest this, and come back down, sure. Or if we do some crazy wick where, oops, sorry. Or we do something like this, sure. But this level over here needs to be taken in my eyes. I don't know when, I don't know how, but I don't like this particular candle here, where you had some kind of like indecisive candle and then a pump up to all-time highs. Usually when you do that, you see a retest. And more often than not, you see how we had an ascending accumulation. When BTC does these ascending accumulations right here, you don't revisit them. You do not revisit them. The only time you revisit them is if you're extremely bearish, like a bear market. And we are in a bear market. So technically speaking, if we do happen to break right under this top, right, $12,000, more likely than not, you will, unfortunately for me, come down here to the actual consolidation that led to the reaccumulation, the ascending accumulation, right? You understand what I'm saying? This accumulated in an ascending perspective, rising supports. And we never revisited it before. We never even retested the breakout. So this is a big problem right here. This little box right here is a big problem. Because you don't just come here, stop, even though 10K is a logical level. More likely than not, after you get your reaction, you bleed and you come down to the origin, which is going to be 7,000. Again, I'm not saying we're going there. And I have doubts that we're going to break under my yellow box. So that's why I'm sticking to my game plan. I'm playing this as is. 10,000 to 13,000 should potentially be the bottom if the bottom is not already in local wise, right? Macro, we got a long time, probably another couple of maybe 3-4 quarters, if not 2 quarters. We're far away. So let's go to level play. We're looking at the 5-day duration right now, 5-day time frame rather. It's a very logical game plan that we have here, right? Top of the range is 24,000. Bottom of the range is roughly about $15,000, $16,000. But ideally, what you want to see is this being your range. This is the correct range right here, the way I have it structured. So anything from here all the way down here is fair play as a descending channel until we break above it. So I'm not a channel guy at all, nor do I care to be a channel guy. But for those people that actually do channels, it's a very there you go. Until you break above this channel, more likely than not, you're going to descend. Unfortunately for us. And the bottom part will be like anywhere between 12,000 with the candle close, 10,000 with a wick. I'm being realistic, guys. I've stepped back from charts a lot, and I think I became a better trader because I stepped back in charts. Like I don't care as much like I used to. I was very emotionally attached to my investments. Now I'm just like splashing money every time I see a decent high time frame reversal. So level to level play now. Let's go to a regular chart. Let's go to the lower time frame. By the way, Irmo asked me about this indicator too. I promise you guys, I'm gonna post it for you guys. It really helps from a mapping perspective. It does actually, helps a lot. Okay, so we don't need Monday range anymore because we already broke above Monday range. Let's do monthly. Where's the monthly? Monthly. Okay. So the weekly open is a daily open, which is good. Likely for it to hold if we do happen to go back down to retest it. The monthly low, as you see, is the 15K. But the most important thing here is a monthly high. Now, if you go to a higher time from a 12-hour, maybe yellow isn't the best color for you guys. I like yellow because I don't want to see it here. And let's get rid of the daily because we don't need it since we have the weekly open. It's clean, right? The monthly high is currently sitting at roughly about 21.4. Monthly open is still sitting at 20,500 and change. Likelihood is that by this weekend we should go and retest the monthly mid. The reason why I'm saying that is because this whole month, all we've done is literally, where is this? This right here. Stay in this range right here, right? So likelihood is that you're going to retest the midpoint of the range and then make a decision whether we're going to break down or break to the top side. That being said, once the monthly VWAP populates tomorrow, then you know for a fact that if we break above it, when it comes back down to retest it, it's going to be reactive. If we break under it, we're going to be bearish. So just be patient, right? Just be patient. Wait until the new monthly VWAP opens up. Likelihood is that we're going to break up to the top side and use it as support. Let me get rid of this. Weekly. Weekly VWAP is sitting at 17,900. So everything is pointing to that mid. Where are we? Right here. Everything is pointing to this right here, guys. As a retest. Between 17.9 and 18.5. Right? Everything is pointing there. And I am expecting this to happen probably before Sunday. And then at that point, we have to see what's going to happen. It's basically a retest of the breakdown. Because even if you go to a higher time from like a weekly, right? What is that? That's literally the breakdown that took place. Make sense? Let me get rid of this. Let me get rid of the box. That's your breakdown. So play accordingly. Don't blindly long something. We're still downtrending. Oscillator wise, the reason why I'm gun hold about my longs. I don't care what I say, what I see. We're doing a double over under here. We're literally doing a double over under. But, right? Over under. We're doing a double over under. This is gonna be a bear market rally. If not, we're already in one right now. This is gonna happen. Unless something really fucked up happens with news. RSX, as like we said, weekly bull div. When was the last time we had a weekly bull div RSX? Right? We had one over here, hidden. And we did, I don't know what kind of pump that is, but it definitely did at least 20, 30%. Let's see. 40%. So even if we get half of that, we'll still go to $20,000, right? And the most important indicator of everything right now is the order block indicator, guys. Make sure you have it open all the time on a higher time. You don't have to use it on the 1 hour, the 2 hour, unless you're scalping, but on the higher time frame, make sure it's always open. The reason why is because when you're in a bear market or a downtrending market, you're not going to break above the high time frame order blocks. They're like, the probability of you opening up a short at a high time frame order block and working is like probably 80%, right? Just keep that in mind. And what I mean by high time frame, I'm talking about 3-day to weekly. 2-day works too. 2-day works as well. But when you, like, for example, right here, right, this literally led to the downfall. 2-day works as well. But if you want to be safe and you want to do some size, 3-day to the weekly high time frame order blocks, very hard to break above if you're already downtrending. And you have 3 right now. You got one over here. You got another one over here. You got another one over here. So by the time you break above all this, the likelihood is that you're going to be downtrending a lot more than uptrending. Keep that in mind. Always have this indicator open. 12 hour, let me show you guys in the lower time frame how this looks right now, right? So this thing got front ran hard, man. I had bids here too. I had leverage bids here and it got fucking front. I didn't even enter, unfortunately. I'm in spot, but I didn't enter leverage because I got front ran. So likelihood, when you get back up to this red bar, which is the exhaustion level of the order block, right? I have them on all the time. When you get back up here, you're going to get a reaction to the downside. And the idea is that if you do happen to get back up and you get a retest, that's what you want. But you want the retest to hold, right? You don't want to get back into this range. Most important level for you to watch right now on a little bit of a higher time frame, like not even a higher time frame, to a 12 hour, is what happens when you get past this consolidation. This consolidation over here. Likelihood is you're not going to get above $22,000 for a very long time, right? So even if you zoom out a little bit more, 2-day, I think I had it. Where was it? Or 3-day. Where is it? Right here, 3-day. Just mark this. 3-day OB. And you know that when you're looking at your lower time frames, regardless of it, when you get back up to this blue line, it's going to be fucking a hammer. Slap in the face, hard, right? Just keep that in mind. No matter what time frame you play, when you get back up to this 3-day order block, it's going to be a little bit of a hammer. Other than that, guys, there's nothing really much for me to update. Like I said, I'm in spot. I'm planning on accumulating more spot. I'm still bearish overall, but I'm at a spot in my life right now. I'm at a point in my life right now that I'd rather DCA in and then close everything off, DCA in and exit at the real macro breakdown between 31 and 36. And I don't care if it takes me a year of holding. So because this is the way I see it. This is the blue is the main exit. And if you happen to get lucky to buy in the black, right? Make it very simple. If you happen to get lucky to buy here, you exit here. And then we'll see what happens. Maybe chop around for another freaking 2 years. But there's going to be a reaction that's going to retest this whole breakdown. Because we have yet to retest the breakdown. And BTC never, ever, even on lower time frame, whenever it breaks structure, no matter what happens, it doesn't shy away from doing its retest. And that is the retest, $31,000 to $36,000. You could even get a wick up to like 44, right? Obviously, candle close on a weekly time frame shouldn't ever surpass 31 or 32,000. But regardless of the fact, you'd still distribute it up here. And for like over a year, you distributed up here for a year and a half probably. You're going to retest this, right? You're going to retest this whole distribution up here. And when you do retest it, you have to make a decision. You're going to be greedy and hold it thinking you're going to go to all-time high. You're going to get the fuck out. and then wait until you get a proper higher low. So there's only two ways to play this. It's like the inverse of what happened here. Hold on. All right? Accumulation, downtrend, accumulation. Now you're uptrending. Right? But where are you going to uptrend to? Where was the origin? The breakdown from the inverse. Think about it. Just inverse, right? It's no difference. Deviation went up, came back down, retested the support level, right? Retested deviation. This is deviation. Retest deviation. Retest again. Massive breakdown. Accumulation. Boom. Break above. Right? You're going to have some kind of bearish div right now because it's invert. Come back down, maybe up to here, somewhere here, and then assumingly continue downtrend to retest the origin. If you take time and you zoom out, guys, it's really not that complicated. You know, when you look at the lower time frames, if you're scalping, it's fine. But if you're not scalping and you're looking at the lower time frames, you're going to drive yourself crazy. But I still think that what we're doing right now is, regardless of the fact, we're creating a bear div that will potentially do something like this, and then come back all the way back down here and retest the accumulation zone, which is this. All right, guys? Again, don't forget, this is an invert. This is invert. This is the way it should look, ideally. Cheers. Trade safe. DMs are always open. And hope you guys have happy holidays, man.